Just the other day, a student of mine in the Value Pricing Academy asked me a question. They were struggling with scope creep and wanted some examples of what causes scope creep. What are the sorts of things that can result in projects taking longer and us making a loss? So in this video, I'm going to share with you 7 examples of scope creep, 7 things. And once you become aware of those 7, you can start to figure out what are the systems, the structures, the processes that you'll put in place to make sure they never happen to you again. Hi there, it's Mark Wickersham. I am the founder of the Value Pricing Academy and the Bookkeepers Pricing Academy. I teach accounting firms, accountants, bookkeepers around the world how to master value pricing, how to grow their firms and have much more fun. Anyway, in this video, we're going to look at some examples of scope creep. I'm going to take you through 7 examples. Once you are aware of these examples, then it'll help you in the future to deal with scope creep. Now, if you've not yet subscribed to my YouTube channel, then why not do that now and hit the bell? That means you will receive announcements when I produce new videos, and so you'll always see the latest that I produce. Also, please give it a thumbs up if you like the video. Please give a comment underneath. Please also share. Okay, so let's look at those 7 examples. Number 1, the first one is when the client gives you corrupt data or incorrect data by the client. That's an example of scope creep. The data is not in the format, the records are not in the format that you expected. So be aware of that. You'll have examples of that. You'll know that's happened many, many times. It's a common one. So what you want to make sure that you do is when you are right at the outset of the project, when you're discussing the project, when you're coming up with the price, the scope of the work, you want to make sure that you build into your proposal or fixed price agreement, you want to be really clear on the scope of the work in terms of the data itself or the records. What format do they need to be in and what will happen if they are not in that format? The second one, again, a very common one. I remember this happened all the time when I was an accountant many years ago in a large accounting firm, and that is when accountants bring in the information piecemeal. They don't give you everything you need right at the outset. I remember when I was an accountant many years ago, people would drop off the books and records, but they'd forget to, and these were in the days before, by the way, cloud technology. This is the paper bag jobs you may recall if you're as old as me. And so you'd find that there would be some missing invoices, missing checkbook stubs, there would be missing information. And you wouldn't know until you start the work. And then you start the work, find there's something missing, you come to a halt. You have to go back to the client. It may be another 2, 3, 4 weeks before they give you the information. By then, you've forgotten what you did. You've got to find the files. You've got to take them off the shelf and then start again, review where you've got to. And that causes not just the duration to take longer, but more and more time every time you pick up a file, put it back. So think about that. Do you have that do you ever have that where the client does not give you all the information at the same time? If that's the case, build a system build it into your conversation right at the outset. Manage expectations with the client as to what will happen and how the price might change if they don't give you everything you need at the start. Number 3, the third example is, and this is not your fault or the client's fault, but sometimes legislation changes. The laws change, the government changes something that impacts on the project that you're working on. And that means that we might have to do some more work. It may be that we can't do it in this particular way. We've now got to change and do it this way because the laws have changed, the rules have changed. It happens. We need to plan for that. So once again, what will happen? What's the conversation you'll have with the client? How will you manage their expectations that the project you're about to undertake is based on the current legislation? You want to explain that to them and let them know what will happen if something changes. Number 4, here's a really common one. Clients missing deadlines. You know, the client says to you, I'll have the information by this date. You'll have the payroll information within a week of the payroll needing to be run. The client makes these promises and then what happens is they miss the deadlines. So again, we need to think about how do we deal with that. How do we deal with it at the front end in terms of managing expectations? What's the words that we build into our proposals, our fixed price agreements? What's the system, the scripts that we'll use if a client is late? Number 5, I think. Number 5, 1, 2, 3, 4, 5, yeah. Increasing number of transactions, or something changing in the business. You gave a price to a client to do some work, perhaps bookkeeping, annual financial statements, and something's changed. They've grown, they've got bigger, there's more transactions, there's more employees, they're a bigger business. That happens, doesn't it? We have to make sure that, again, at the very outset, that we manage expectations, that this is the price based on the current circumstances. If the business grows, congratulations, well done. It will, of course, mean more work, and we will have to revisit and change the price. Number 6, discovering past errors. Particularly when we take over, for example, a brand new client. You've had that situation where you start the work, you're doing their tax returns, for example, and then realize that a few years back they got it wrong. There's mistakes, there's errors, and we might have to rework some of it. We might have to notify the tax authorities. There's some extra work because of those past mistakes. So again, how are you going to deal with that? You need to have a system in place. You need to make sure you communicate that in your proposals, fixed price agreements, your conversation around talking about the scope, and also the conversation you'll then have when that then arises. Number 7 is, and this is a common one, if you do payroll. What happens when you're doing payroll and you've done the payroll, you've produced all the pay slips, you've sent them to the client, the client's employees, and then the client says, we made a mistake here. Bob didn't work this number of hours, and Jill was actually off for this particular week, and Mary did some overtime, and you have to rerun the payroll. And if you have to rerun the payroll, then that's more work that you've got to do. If you have to rerun the payroll because the client gave you the wrong information, then you must charge a price for having to rerun it. And what you want to do is have that conversation before it happens, right at the outset. Because when you plan for scope creep, when you have the conversation with the client at the outset, you can build in the systems, you can manage their expectations. When the client is aware of what is outside the scope, when the client's aware of what counts as scope creep, when the client's aware of the consequences, it's then a much, much easier conversation for you to have when these things happen. Okay, I hope you found that valuable. Please remember, if you've not subscribed to the channel, do that. Please give it a thumbs up. Please put a comment below. And also, please feel free to share the video. I will see you again on another video sometime soon. Goodbye for now.